You're listening to The Whole Truth, a Resources Rising Stars podcast.
Welcome to a ripping edition of The Whole Truth podcast. I'm Paul Armstrong. We just had a great chat with Dave Reeves. He's a Managing Director of Calidus Resources, and hasn't he been on one roller coaster ride? Dave did a spectacular job with his team in building the Warrawoona Gold Project, only to be hit by a couple of curveballs. Water was one of them, a lack of water, and of course a little thing called COVID. The next thing you know, the share price went back to about 20 cents. But he's turned the corner, as you'll hear in this podcast. Dave says they've overcome the water problem, COVID's gone away, they're making money, production's going up, and things are looking rosy in the garden of Calidus Resources yet again. He also talks about a little lithium assets of some. He also talks about some lithium assets that the company has that look very promising up in the Pilbara, and how they plan to unlock the value of that for shareholders. Dave makes a very interesting point that he believes Calidus is the cheapest gold producer on the ASX. You be the decider when you hear the podcast. I think you'll find it very interesting. Been one hell of a roller coaster ride, hasn't it?
Yeah, you could certainly say that, Paul. Yeah.
So everything went hunky-dory during the construction phase.
Yeah, look, I mean, COVID, what else were you going to do in Western Australia bar build a mine? And, it came with the same challenges and logistics and, trying to get things out of China in lockdown. So, maybe it appeared it was smooth sailing on the surface, but there was plenty of paddling underneath going on. But yeah, it was on time, on budget. Amazing job from everyone involved there. Gold was pretty steady going up. Before first gold, we hit just over $1, I think. And just before we poured first gold, sentiment changed in the market and all the gold started coming down. So, I think there was that macro in the market.
You got a bit of a perfect storm in some ways, didn't you?
Yeah, so we had negative sentiment, and then obviously we had our commissioning issues.
And so the stock went to what, about $1?
$1.05, yeah.
There you go, $1.05. It was, as they say, a market darling for a while. As you pointed out, everything was on track, on time, on budget, and that's not something you should be flippant about, is it? Because a lot of projects particularly in Western Australia, are way off time and on budget, particularly at that point. So you shot the lights out there. The stock went to $1. Everyone was loving you. What happened?
Yeah, as I say, macro sentiment, that was the first thing. And the whole general market turned. Every gold stock in Australia was getting sold down across the board, and that's before we even knew we had issues. And then, commissioning didn't go as smoothly as hoped or as planned. So I suppose there was a couple of key issues there. The first was mill throughput. Just didn't have enough water. There's a whole range of technical reasons why, and disappointing that they happened. But, over the intervening time, we put in more bores. We've hit water finally in the open pit, so getting plenty out of there. And we've upgraded one of our water reclaim units that we call a thickener. That's now commissioned. So the mill's actually running way above nameplate now as we speak. So, that was problematic. We weren't getting through the tonnes, therefore we weren't getting ounces. In addition to that, we were coming out of COVID. We got out of lockdown in WA and let the beast loose. And how that affected us was a number of ways. Labour, just trying to find enough.
It washed through the camp, didn't it, at one stage?
Yeah, no, washed through every camp in WA, and you saw it in everyone's quarterlies. Everyone was getting locked up and production was down and people were deferring things. And, that happened at our most pointy part, which is when we were commissioning. So not ideal timing in that regard.
And you had people stuck in their rooms, didn't you, at one point?
Yeah. No, it was all part of the state government, legislation. So whether you were showing symptoms or not, you got locked down, which I think a lot of people found very frustrating at the time. But what that meant was we didn't have a lot of people for moving the dirt, and we didn't have enough people in supervision. So grade became an issue for us. And that was a combination of things. It was this lack of people and lack of supervision.
Yeah.
Didn't help. We were learning about the ore body. We were trying to catch up because of the lack of people, putting in bigger diggers, maybe getting more dilution that way. Not really understanding how the blasting
you had a lot of balls
worked.
in the air at the same time, didn't you?
Yeah, we did. Again, we wouldn't have expected this level of learning as we saw. It probably has been a bit more of a challenging ore body on the top of a mountain. Certainly helps from a strip ratio, but not from grade controlling or accessing or digging without it blowing down the side of the hill.
I mean, you're mining gold in what is historically iron ore country, right? So, it's not as though you had a lot of people to look to for experience.
No, but at the end of the day, it is a gold mine. It's a sheer hosted gold mine. We've all done it before. We've built mines, run mines before, and I think this has probably been the most challenging. In the middle of that, we're in major inflation, so costs are also going up quite significantly in certain areas. So just a whole range of things, from supply issues, trying to get chemicals in. There was that whole squeeze. You look at cars at the moment, for instance, what is it, 2-year lead time? Well, same sort of things, PLC cards, boring things like that, which you need, just weren't around. So you were making plans left, right and centre.
So that's all the sort of negative stuff. That's what happened.
Yeah.
The stock went, the long and short of that story though, is the stock went from $1 to about 20 cents. And, you're not one to mince your words, as anyone listening to this can hear. You put it out there, you laid it on the table. There was no bull dust or spin about it. That's what it is. The reality is the gold was still in the ground though, and you still had a plant that did what it was meant to do. So looking forward, stocks come back to 20 cents, but you've pretty well solved the problems. You can see the results that you've put out for the March quarter. You're having, as they like to say, the trend is your friend, isn't it? Things are definitely on the turn or on the up. That's statistically, that's undeniable.
No, look, we made good money last quarter. We'll make better money in the coming quarter, and on we go. So very happy where the ops are now. Look, we need to still fine-tune some things on the mining. The mill's running beautifully. The whole admin system's running well. Grade, we've got a lot better handle on. So we just need to make sure we keep moving the tonnes day in, day out. That's probably the challenge for us at the moment, to make sure we do that. But all in all, if you look at where we were, we'd come back to 28 cents from 20. And, gold price heading up, we'd probably be in the mid-30s if it wasn't for the fact we did a capital raise. And we did that, to shore up our balance sheet. We would have been, in the last quarter, we had 8 million cash and bullion. When you've got costs on site of 12 million a month, that's not a lot of working capital that you got in your back pocket. If anything goes wrong, you need that little bit of buffer. So from a risk point of view, said, look, we've got to do this. And not just that, if we buffer up enough, then we've got cash in the bank to do these expansions. Because at the moment, let's call it 70,000 ounces for our numbers that we're running at. We want to push above, 100,000 ounces. And why we want to do that? Well, it's all roughly the same and all-in sustaining costs that we're looking at longer term.
It's a leverage story, isn't it?
Yeah, 1,800. It's leverage. More ounces, more cash, less influence of hedge, just...
So this is where the investment opportunity is, right? The stock's been marked down. Rather than paying $1 for it or 80 cents for it, people can pay 20-odd cents for it. You've now got a pattern of improving results. As you say, you're making money. The gold price is good, and you're on that strategy now to implement, the increased production profile that you talked about, 70,000 ounces, but you talked about 130,000 ounces ultimately being your growth target, haven't you?
No, absolutely. So, there's a whole range of things in there to get to that 130. There's bringing some of the higher grade open pits that we do have around, and we're actively working on that now, doing some drilling on that as we speak, and grade control wise, getting ready to activate those pits. We've got the underground beneath the pit, so we'll probably do some more drilling on that in the coming year as well, just to firm that up and get ready to go with that. But most likely we'll get a little float plant going, little sulphide circuit going at Warrawoona. We've got a 6-gram ore body sitting nearby us called Copenhagen, and we'll feed that in, and that's an extra 12,000 ounces in the year for through that plant. It doesn't take capacity away from Warrawoona itself, and that's a really good cash generator, and we think we can do that very cheaply. And then that forms the basis for Blue Spec, which is this really high-grade mine down the road, about 75 k's away, 24 grams a tonne. That just rolls off the tongue easily.
Yeah.
And that's a 30,000 to 40.
That changes cash flow, doesn't it? 24 grams a tonne sends cash flow through the roof, doesn't it?
Yeah, without a doubt. So that's the final piece of the puzzle, bringing that one in. If we can get that circuit in early, means maybe we can bring blue spec in a bit early. We've also got new discovery called Felix just near blue spec, so we're starting to build a bit of critical mass down in that part of the world, and we'd certainly like to add some tonnes down there and use that in the longer term as a nice base moving forward.
So you got a stock that's trading at a quarter of what it was. Production is up and away. You know, that's all looking good. But I think it's overshadowed the other little jewel in the crown here, the lithium assets. What are you planning? What have you got there? Because it's sort of fallen into the shadow a bit, hasn't it?
Yeah.
What have you got? And what are you going to do with it?
Yeah, so we went out pretty hard and fast in the early days, and then our focus obviously went back to Warrawoona when things weren't going quite as planned, and we downed tools on the lithium side. You know, in the meantime, the exploration guys went out and found Felix, so they haven't been idle. That's that nice sort of mineralisation we're striking near blue spec. But in the meantime, we have been quietly working away in the background. Like, the ground we've got's really good, but we also wanted something that had real potential. So we did another deal with Haoma, where they put in more of the tenements around the East Pilbara, but also some tenements in the West Pilbara, and what's called the Tabba Tabba Shear. We've got 10 kilometres of that now. Now on the Tabba Tabba Shear, that's where the old Tabba Tabba tantalum mine used to be, which FMG now own and have a resource of lithium there. It's not declared anywhere because they're FMG, but, we have been verbally told it's around 10 million tonnes, 1.3, 1.4%. So a nice, it shows there's resources on Tabba Tabba. 400 metres along strike from our tenement boundary, De Grey about, I think it was 2018, drilled 2 holes, both intersected lithium pegmatites. One was like 23 metres at 1.3 and the other 21 at 0.8. So we know there's
plenty of smoke everywhere.
Not just smoke, but there's actual lithium 400 metres from a tenement on the same structure.
How do you make money out of this for shareholders? What's the plan?
Yeah, so, we were talking about demerging and distributing a long time ago, and, there's only so many hours in a day, so that got put on hold again due to the commissioning. So we've pressed the button on that again. We've got the independent geological report underway now. It's a couple of weeks away. I'm entering into DD meetings on the prospectus to IPO that out in the coming, hopefully 4 to 5 months. We'll get that out. Just working through still all of the ATO tax issues. What can you distribute? What can't you? And etc. But we'd like to release that on its own 2 feet because we think it's got real upside.
Is the plan to do some sort of in-specie distribution? Give Calidus shareholders some of the lithium stock? So
first thing on the list is to get it out on its own, get it funded so it can have a red hot crack.
And give it a life of its own.
Yeah. Build value. Now, whether
within the Calidus framework.
Within Calidus framework. Now, a lot of it comes down to tax, ASX, banks, securities, whatever, is whether we can distribute that immediately or we have to wait for escrow from the ASX. So those are some of the things we're working through. The main thing is get money into that vehicle. Calidus focuses on gold. Pira focuses on lithium, and get it a team that can focus in on that lithium and get out there and see what we can find.
And if you get some good results, add some value to it, as you say, with a view to perhaps spinning it off?
Oh, absolutely no. We are looking at IPOing it. It's just whether Calidus holds the shares or we distribute those shares or we do a combination of both straight up or whether we distribute those shares a bit later. So you've got 2
avenues of making money for shareholders in simple terms, haven't you, Dave? You've got the ongoing growth and success of the Warrawoona project now with the gold ramp up, a tailwind from the gold price, it would look like. Things, the tide is going your way there, and then you create value for shareholders through the lithium assets. It would appear that there's evidence anyway that perhaps the lithium market is again on the up. So you could have a similar turn to you've had at the gold project. Two distinct asset bases, both going the right way for shareholders. That's all for a fraction of the price I would have paid a year ago.
Yeah, absolutely. So it's been a tough ride for current shareholders that have held all the way through the roller coaster like myself. It's not wonderful, but at the same time, we've just done a raise. There's an SPP out there. You can participate with optionalities. I do look on any comparative. We are the cheapest producer out there on the ASX in Australia by a country mile. And we need to rebuild trust of the investment community. But when that happens, it just takes a bit of time, be it 1 quarter, 2 quarters.
There'll be a lag, won't there?
There'll be a lag
between your statistics, your achievements in numerical form, if you like, and the market's reaction.
Yeah, so I certainly believe the only way is up from here. It has been tough, but gold price is heading in the right direction. I think it's got further to go. As you say, lithium, we're going to need plenty more of that stuff. I see the WA government just put another couple of billion into some massive battery in Collie today. All of that's got to come from somewhere. So I think lithium's still got a lot of legs left in it. I think we've got fantastic ground in both the gold and lithium. So cash flow coming out of Calidus, pretty exciting exploration ground in both of those commodities, and both of those commodities looking pretty good over the medium term. So, very bullish about the future. We need to deliver, we understand that, but we also are looking more to the future than the past, and how we grow that production, grow that cash flow, and everything flows from there.
Painful, as you say, for some shareholders who rode the roller coaster down, but that's where the opportunity is, isn't it? That the smart money will look at that sell-off and say, hey, this is how you make money. You go where others don't want to be initially. You can front run that turnaround, and that's how you make money.
Yeah, that's it. And you would have seen that in our placement on that was really heavily oversubscribed. People saw as one of the analysts said, the deep value in the stock, less than 100 million, or I think, probably around 100 million market cap as we sit today, for an asset that cost 150 million to build, that's putting out cash. As we chip away at that hedge, and as the gold price goes up, that just grows and grows, and as we increase production, that grows. So, it's certainly through a pretty nasty storm, but looks like a lot better sailing ahead.
Fantastic. Well done on sticking at it. I know it's been a tough journey in parts, but there's no doubt that there's plenty of evidence that things are on the turn, and that's where the opportunity is. Thanks for joining us.
Thank you, Paul.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.